What's going on, everyone? Happy Monday to you. This is Amir with the MIDD. I'm here with my partner in crime, Ray Cruz. The MIDD is the Mortgage Intelligently Deal Desk. So we are in today's video, we are piggybacking off the topic that we discussed on Friday. If you guys remember, we spoke a little bit about Zillow, what's going on with Zillow, but more importantly, we talked about opportunities to reach back out to your clients and provide value to the families that they've helped over the years. And we spoke specifically about debt consolidation last time. And we want to talk about a deal that Ray's been working on. He's helped this family save hundreds of thousands of dollars, both over the period of their loan and on a monthly level as well too. It was restructuring their debt. Now, today's topic is just going to be a little bit different than the exclusive products we've talked to you about. Our portfolio products is a conventional product, but it's to demonstrate to you guys how you could reach back out to your clients, to your, I hope you have a CRM, a Rolodex of, families you've helped, and provide value. It's not always about selling a home or listing a home. It's about providing value and being top of mind to them when that opportunity strikes, for either referring you to someone, or just remembering that you're the one that made a huge impact on their wealth. So Ray, without further ado, tell us what you did so amazingly.
Yeah, so thanks Amir for the introduction. Welcome everyone to our Mortgage Intelligently Deal Desk today. Hope everyone is having a great Monday so far. And like Amir said, this is just really a piggyback off of Friday's call when we talked about a little bit about Zillow and restructuring debt. So in this particular scenario, I had a client contact me who's also someone that I know. And they basically just wanted to do a simple, rate term refinance. They wanted to lower their current interest rate on their first mortgage, and along with they have a small home equity line of credit. So basically just wanted to combine both into one. So and save some money, because the interest rate on the line of credit was a little bit higher than the interest rate on the first mortgage. And it was also going to be due. It was a balloon payment that was coming due here in the next couple of years. So, wanted to take advantage of the current rate environment and just to basically do a refinance. So during this process, as you guys know, we check credit. Credit scores were excellent. However, I noticed that they had, 3 car payments on their credit report, along with some additional credit card debt on their credit report. So, it's kind of started doing a little bit of math with them, and they've already had the mortgage for 10 years. So instead of taking the mortgage back, 30 to another 30-year, starts talking to them about, hey, what about maybe just, shortening your term on the mortgage a little bit, maybe take another 5 years off. And then as I started looking at their debt a little bit more and started doing a little bit of an analysis with them, I realized that they were probably paying on their monthly payments right now, the equivalent of probably like a 5-year mortgage, right? I mean, if they took their mortgage and literally, amortized it over 5 years, that's pretty much what their total monthly debt, with all their car payments and the monthly payments on their credit cards, what they were paying. So started looking at the debt a little bit deeper and noticed that, some of the car payments were on, 84-month notes or 72-month note, and of course the credit card debt, everybody knows how difficult that is to knock out, especially if you're just making minimum monthly payments. So ended up advising, my friend and client, hey, look, what about if you just basically took out mortgage, use some of the equity in your home that you're taking out, and the rate was an amazing rate. It was in the low 2s because it was a short-term loan. It was a 10-year term, right? So the rates are a little bit better. Take out, a 7-year term loan, right? And that's the other cool thing that we can do that, they had no idea. They only thought there were, 30-year options or 15-year options. Some people know that there's a 20-year option, 25-year option, or even a 10-year option. Well, here at MCF Mortgage, we're also allowing you to do what are called odd terms. So basically anything from 5 years up to 30, you name the number, right? So in this instance, I actually had recommended a 7-year term, basically a 72-month mortgage. They would essentially pay, right, what they're currently paying. And, she could afford the monthly payment, obviously, because they were paying it every month. So I just simply said, look, take what you're currently paying every single month, right? You're already paying it towards all these other debts. Apply it all towards your mortgage, and you'll be completely debt free. You'll have no mortgage, no car payments, no credit card debt, right? Within the next 72 months. So totally makes sense. The payment, I think they did want a little bit of relief. So that was my recommendation, was to do a 72-month mortgage, because they would have knocked everything out. However, she decided to still pay off some of the debt, kept one of the car payments was being made by a family member. I believe it was a son or a daughter. So we left that one out, and then we ended up doing a 10-year term. So essentially, she went from a 20-year, term with that she had left on her current mortgage, a HELOC with a balloon payment that was due in a couple of years, and two large car debts, took all that down to a 10-year mortgage with one car debt left over that I believe it was her daughter that was making that payment anyways, right? So what was my advice? Take that money your daughter is paying you and reapply that right back to your mortgage, right? And you will get this mortgage paid off in 7 years or 6 years in 72 months, right? So, that's what restructuring debt is all about, guys. And that's the conversation that Amir had talked to you guys about on Friday, when you're talking to your clients and taking advantage of the low interest rate environment, right? Taking out a 10-year mortgage at a rate of, right around 2% is unreal. These rates aren't coming back probably anytime soon. Amir talked about inflation being at 5%. It's a win-win. And this borrower will forever be grateful, as she told me, right, for the advice that I gave her, for her to be able to eliminate all this debt, and on top of that, reduce her term on her mortgage and pay it off, hopefully in 6 to 7 years. So that's the story we wanted to share today. Amir.
That's a great story. I mean, guys, some of the takeaways I'm going to highlight, because there was a lot of loan officer talk you guys may miss, but let's hone in on the important stuff. You took a 20-year mortgage, you gave him home ownership and wealth freedom in 10 years. And you gave him an opportunity to even reduce that to 7 years. You knocked off all the high interest credit cards and car payments. You gave them a 2% rate, and they're hedging their money with good debt against an inflation that's going up left and right. So they're taking out debt at a low rate. I mean, look, mortgage rates are below inflation. That's rare. So they're taking good money, good debt, getting rid of bad debt, reducing. They're going to be scot-free in 10 years. Even if they don't apply more money, they're done in 10 years, where before it was 20 years. So imagine you're the realtor that makes this introduction, whether it's to Ray, me, myself, or your trusted loan officer, but you make that introduction that changes someone's future. I mean, if I told you today I can reduce, don't do anything, keep your payments the same, but I'm going to reduce your term from 20 years and you're going to be free in 10 years, and you're going to own your house outright in 10 years. What an impact, not just for that person, but you're talking about building generational wealth. Because what happens when they have all that extra money now? They could put it into their 401k, give it to their kids for college, give it to their kids to buy a house, buy another house. They could do so much with it that just adds on to it. But guys, these are some of the impacts that you could make on someone's future, like Ray did. I mean, Ray, kudos to you. Most loan officers don't look at a deal like this. It's, hey, wham, bam, you want this? If you want A, let me just give you A and call it a day. But,
in and out the door as quickly as possible.
Right. So, that's kind of also what we, Guys, we are different than most companies. Like Ray said, we do offer things that most don't. One is the odd term loan. No one knows about a 7-year loan because it doesn't really exist. No one really offers it. We do. We don't believe in having to put you back to the beginning all over again just because you're doing a refinance. All that payment that you pay down disappears out the door. Okay, we provide you advice. The service that we provide is advisory. Think about a lawyer, an accountant. You go for advice. You don't go for just a service. It's the value that they bring. And you guys, as a realtor partner, can put yourself in that position and you could be the impetus to someone changing their future. I mean, this is enormous to be, it's 2022 almost. In 2032, this lady is going to be done with her mortgage 10 years before she was supposed to be done, and has no debt, no credit card debt anymore, no car payments, scot-free. So whatever she's making is right into investments. I mean, great work, Ray. Guys, call Ray. He knows how to restructure debt. You got to educate your clients right now. They need to understand how inflation could be their friend. It's nothing to fear, especially when rates are so low. I know this is different than we rescued a realtor's commission, but here we rescued a family member, which I think is extremely important. But you guys could use the techniques and parlay this into future commissions by gaining the trust. That when you're the referral source in this transaction, you're going to be talked about. I'm free because my realtor Jane or my realtor Joe put me in touch with Ray. So that's
we like to use the word here, an advocate, right? Be an advocate for your clients is what we always say, right?
Absolutely. You have to be an advocate, guys. We have to see past the deal. We're obviously this is a for-profit business. We're all here, to make money. But you can make money and be an advocate. You could be someone that is changing lives. Not just selling homes, not just selling loans, but changing lives, adding generational wealth. That should be the goal of this business. So, guys, I hope you found this helpful. Ray is your debt restructure king. Get in touch with them. We always say it. Our job as lenders and your job as a realtor should start after the closing, not during it, because that's when you need to be in touch and make sure that whatever course you put this family on, that they're going through that course and you're adding value. Doesn't have to end up in a transaction, but you're adding value every 6 months, every year, whatever that time period is that you feel comfortable reaching out. We advise every 6 months, but you add value so that you build a fan base and you build a following. Anything you want to say, Ray?
No, I mean, just say, really just piggybacking on what you're saying. I mean, and being an advocate for your clients, it'll pay many times over when you guys are able to, provide this type of advice to a client, and like Amir said, it may not be a transaction today for a purchase or a sale, but believe me, that client will never forget that you gave them this solid advice with, really no monetary value to you, right, as an individual, because that's not your business. But at the same time, they'll remember that, they'll appreciate that. And the next time somebody talks to them about real estate, you'll be the first name that comes out of their mouth. I promise you that.
Absolutely. Guys, that was episode number 8. Ray provided freedom from a 20-year to a 10-year mortgage with no difference in payment. If you guys have any questions or you want to have a confidential discussion about something like this, whether it's for yourself or for one of the families you've helped in the past, reach out to us. You know where to reach us, Team CG. The contact information is below on our YouTube page. It's an email. You guys can find us anywhere. Thank you so much and look forward to seeing you guys in the next video.
Everybody have a great week.
You guys take care. Bye-bye.